Focus. Ideate, innovate, enable.
Hello and welcome to Decoding Business Growth. I'm Samira Abdi. Well, they say it takes two to tango, and that idiom seems very apt for the corporate world where mergers, joint ventures or strategic alliances are a way of life. For any partnership to succeed, there has to be that perfect sync of body, mind and soul, or else things can go awry. The focus of this week's episode is on one such partnership. Yes, we're talking about this new entity that is the outcome of a long courtship between the Mahindra Group and CIE Automotive of Spain. Their marriage has given birth to Mahindra CIE Automotive, a well-diversified automotive components company offering a wide range of services across different geographies. Interestingly, in the last 10 to 15 years, both these groups have done about 70 acquisitions in the auto component space with a view to cater to customers across geographies. And what is singularly striking about this alliance is that both these groups have already created trust and bonding at the pre-merger stage. And this is reflected in their actions. So Hemant Luthra of M&M Group is in the driver's seat, even though CIE has a controlling stake of 51%. So here's a look at the Mahindra CIE Automotive story.
Mahindra CIE Automotive is a part of the $17 billion Indian multinational conglomerate Mahindra & Mahindra and Euro 2.2 billion CIE Automotive of Spain SA. The company came into being in 2013 after Spain's CIE Automotive SA picked up a majority stake in the combined auto component unit of the Mahindra & Mahindra Group for about $116 million. And in turn, Mahindra & Mahindra acquired 13.5% stake in CIE for 94.24 million euros. In a complex deal, all automotive component companies of Mahindra CIE, which had operations in India and Europe, were merged in stage 1. Parallelly, CIE's European forging business with operations in Spain and Lithuanian companies were also merged. These merged entities created India-listed Mahindra CIE Automotive, in which Spanish auto components maker CIE hold 51% stake, while the Mahindra & Mahindra Group own about 20%. The balance will be held by institutional and public shareholders. The DNA of the company is strategic acquisitions and alliances. Mahindra CIE is not a legal entity but an umbrella organization under which the group's forgings, machining, stamping and castings businesses were organized. For instance, Mahindra Forgings was set up in 1999 as a public limited company with the name Mahindra Automotive Steels. In 2003, it was converted into a private limited company. Then this company acquired the Pune-based Amforge in 2005. In September 2006, it was renamed Mahindra Forgings with a view to signify the true character and nature of business activity undertaken by the company. To gain a toehold into the European market, it acquired the Stokes Group, Jayco Holdings AG and Schoneweiss in November 2007. The historical acquisitions and now its alliances with CIE have made Mahindra CIE Automotive a well-diversified company offering a range of products across geographies. In India, it focuses on design, development and machining of crankshafts and steering knuckles for cars and multi-utility vehicles. Schoneweiss, its German subsidiary, has emerged as one of the leading axle beam manufacturers in the world. In other German subsidiaries, Jayco, GSA and Falconrod are providers of a diverse range of forging products, primarily for heavy commercial vehicles and collectively manufacturing more than 250 products. Its UK subsidiary Stokes has an expertise in flashless forgings. Today, Mahindra CIE Automotive is one of the fastest emerging global leaders in the forging business.
Actually, Mahindra Forging was never a backward integration for the Mahindra Group. We were trying to buy a company in Finland, and I was part of the team that was doing due diligence. I was head of strategy, and we saw that during the process of due diligence, the number of components were being made in Europe that we found could be made in India. Okay, so the thought of automotive components was never backward integration, was to create an independent company, strong independent company of automotive components. So we then said that we'll go and buy something in Europe and we buy something in India and try and follow the IT model, which is get the right management, get the right technology, get the right customers, do the more complex work there and start the more simple work here till you also get the technology right. So it was the first of 12 or 13 acquisitions that created Mahindra CIE. So it was always meant to be an independent company, not backward integration. And it's a very interesting history to it.
So Luthra, who had the dream to become a billion-dollar company, was aggressively pursuing all options to fast-track growth. It was during the Lehman crisis when the global meltdown started impacting companies' top and bottom lines globally.
They went to different companies, 40 different companies in India. And they didn't see anything that they could really truly identify with in terms of value, culture, morality, if I may say so. So they came to us, and when they came to us, they said that, will you give us some part of your stamping business? And we said no. What we want to do is that we want to have an alliance which is across, so that it does not become a conflict of interest. Okay. I own some part of the forging company in India. Okay. You own a different part of a forging company in Europe. Okay. How will the component move from one place to the other? Okay. Because you will say that you want to make the most profitable components in your plant, and I'll say I want to make the most profitable component in our plant. And therefore this constant tussle will happen. Supposing you have some equipment in Europe, okay, which is not being used, you want to sell it to India where we could use it, okay, and therefore what price will there be? Okay. If a customer from India wants, a Japanese customer from India wants to be serviced in Mexico and Brazil, okay, and you supply some parts to him in Mexico and Brazil, and he happens to be our customer in Europe or our customer in India, okay, are you going to pay me a sales commission? So if you remove all the complexity, and if you forget about your ego, okay, and you just focus on what is the maximum market cap that you can create for your shareholders, and never mind who owns what percentage of the shares, okay, that is what drove the transaction.
This trust and pre-merger integration has made Mahindra CIE one of the world's largest forgers, with a presence across Europe, Latin America, North America, India and China. The synergies from the merger have started kicking in. Now, some products have been moved to the low-cost plants in Lithuania or Spain from higher-cost facilities in Germany. It is also benefiting from the fact that in many places in Europe, instead of competing with CIE, now they are collaborating with them. So customers are giving them price increases. In turn, this has made it the 75th largest global automotive component company with consolidated revenues of 5,569 crore rupees as on FY 2015. It has emerged as a strong Tier 1.5 supplier to global OEMs like Fiat, Daimler, Volvo, General Motors, Volkswagen, Tata Motors and Mahindra, to name a few. Mahindra CIE's unique feature of total solutions has worked well. OEMs across the world are shrinking their suppliers. They want to work with well-capitalized suppliers who have R&D capability. What also works in the alliance's favor is CIE's proven record of generating operating margins of 14 to 15% even in countries like Europe. Mahindra CIE's greatest advantage lies in its significant geographic spread. With a presence ranging across Europe, Latin America, NAFTA region and Asia, the company has limited competition in terms of presence. On that note, it's time for a short break. When we come back, CNBC TV 18's Sumaira Abdi talks to Anup Bagchi of ICICI Securities to decode Mahindra CIE's success story. Stay tuned. Welcome back. This new entity, Mahindra CIE Automotive, has become a darling of the Lal Street as the stock has shot up by over 4 times since it signed the deal in October 2013. Sumaira Abdi caught up with Anup Bagchi of ICICI Securities to find out what led to this phenomenal rise in its stock price.
Hi, Mr. Bagchi. Thanks very much for joining in. The company we're talking about this week is Mahindra CIE. Now, this is a company that has a very strong pedigree, right? And they've also been on a big acquisition spree. How, as an investment banker, how do you rate this strategy of theirs to actually go out and buy?
No, I think we must first understand the overall ecosystem. I think globally what's happening is that the OEMs essentially are saying that we want mega suppliers. We don't want regional suppliers.
Right.
And that is also driven by their own changes in strategy. They obviously want auto component players now, to be able to partner them in every geography that they are now setting up the plants, which is only possible if you're large, because then you will have capital to deploy, set up new factories,
Right.
etc. Also to take a lot of load of R&D onto themselves. So a lot of auto companies are also pushing a lot of R&D demand from the auto component suppliers. Third, of course, is that they have to be large in size. So many people are reducing the cost of coordination and saying that if I get a mega supplier, then I can deal with them across geographies, across sourcing points. So I think that is driving the OEMs. And it is no wonder then that auto component players also have to mirror the same strategies. So I think the big are becoming bigger. I think the place for small regional suppliers is getting shrunk.
Coming back to Mahindra CIE now, like you mentioned, their focus is to become one of the formidable players in the world. What are the challenges or the risks, as you see, for this company to actually get to that position?
No, I think the challenge and the risk for them, see, they will be around 75th. Globally, if you take CIE plus Mahindra CIE, which is sort of one group.
Yeah.
If they have to move up, they require to be much larger. They require to, fit into the OEM strategy even more closely. They require to invest more in R&D. And for that, they have to grow faster. And which is why I feel that, and they have to grow nearer to the OEMs. Which is why I think a large part of strategy will still be to acquire companies and grow fast. CIE actually, if you look at their strategy, the parent strategy has been to grow through acquisition. That's the only way. That's the only way to grow. Actually, I don't think organic is a way to grow and reach out fast and capture all the opportunities fast, or move up the rankings very fast. But you have to always balance this with your financial structure and your capital structure. You can't be taking too much of debt, because then if you make mistakes, you don't have flexibility. And the other strategy of CIE always has been that once you take it on, turn it around very quickly. Use turnaround specialists, cut down cost, streamline the processes and get it back, so that part of your funding can be done through internal accruals and part through dilution and little bit through debt. So that has been
this
the
is exactly the point I want to come to next, because this is a group that has done very well in terms of acquisitions, because there have been not a lot of problems in terms of integration, because sometimes there could be, right? They got Satyam, right? They managed that. So is it just that the turnaround specialists have done their job well, or is it something about their strategy which others probably haven't managed to catch on?
No, I think here the clapping is with both hands. See, I think CIE also brings to table the experience of integrating, and Mahindra's full credit to them. I think they figured out strategically two things. One is that it is better to be a dominant shareholder in a larger group, because that's where the movement is, strategic movement is. That is one. Second is from an integration perspective, make sure that the integration doesn't give you setback as far as movement is concerned. So they have also been very, very proactive in picking up the good things of CIE while retaining the good things of Mahindra. I think you have to give 100% credit to Mahindras for that, and also CIE to be able to bring it. I think as a partner, they have worked very, very well. They have been able to turn around geographies, and which is why you see the market cap and the prices, etc., the way they are behaving.
Yeah, and I guess what they've also done well is to focus on technology, and their other focus, which has been new clients, is also something that has worked very well for them. So from a company like Mahindra CIE, with the kind of positives that has had, what's the kind of rate of growth that you think we can expect from them in the coming years?
No, I think if you see the areas where Mahindra CIE operates, essentially, in spite of the fact that their OEMs, haven't grown that well because, the sectors in which they are in, you take CE or you take tractors or you take passenger vehicles, they haven't done that well in India in the last 2-3 years. In spite of that, they have outperformed that. So I feel that, at the trough, they are doing very well. And I think as the economy picks up, generally you will see tractors picking up, you will see CVs picking up. So I think the rate of growth in this must be pegged to the rate of growth of passenger vehicles, commercial vehicles and tractors. I think they will do very, very well, as the economy picks up. Other geographies, they have turned around to cost cutting, making sure that every processes are optimized, and that is what they are working on in India as well, which is why you see them outperforming, you see them doing much better, although their underlying OEMs are not doing that well. So they are structurally at this point of time they are weaker, but as that moves up, I think they will do even better.
But one thing that they haven't managed to turn around is their bottom line. I mean, do you think the street could at one point lose patience with this company? Aren't there any low-hanging fruits that the management could sort of pluck off to at least turn the company around, show some profits?
No, I think it's a good question. You see, these companies are high operating leverage companies in the sense that there is a very high fixed cost. The variability in the cost is lower. And so if there is a dip in the OEMs, that immediately reflects onto EBITDA. The point is that when there is a turnaround, you will see a very sharp upturn at the EBITDA levels, and then the turnaround will be very sharp. So these are typically high operating leverage companies. And because the OEMs are not doing very well, the CVs are not doing very well, the tractors are not doing very well, passenger vehicles are doing okay. So I think we are looking at a tough time where they are doing reasonably okay. I think when the turnaround happens, you will see a far, far more. Because all the top line will fall into the bottom line. And I think that is where the market is pricing that into it. Do I think that, market will run out of patience with Mahindra CIE? I don't think so, because it's still not very large. I think the potential is still very large. And also they are also diversifying. See, today they also have, concentration risks in geographies, in OEMs, etc. So that also they are diversifying. As and when they diversify that, the risk premium will also decrease, and people will find it easier to digest Mahindra CIE stock even at this valuation.
All right, so just to wrap up then, if you were to do a SWOT analysis of Mahindra CIE, what would you find?
No, I think positives we spoke about. I think the only, if we were to see weaknesses, I think concentration risk is one of the weaknesses. And the fact of the matter is that passenger vehicles, commercial vehicles and tractors still have not turned around, and that's a fact. So as that turned around, I think it will be a big positive.
All right, Mr. Bagchi, thanks so much for joining in. Pleasure speaking with you.
Well, that was Anup Bagchi's take on the company. On that note, it's time for another short break. When we come back, we look at the road ahead for Mahindra CIE. Stay tuned. Welcome back. The stock market clearly seems to reflect its fundamentals. For instance, its Schoneweiss facility in Germany has witnessed nearly a 30% jump in its productivity.
If you see the performance for the last quarter, which we have published, is significantly better than the last 3 quarters, because the turnaround has happened. We've stopped making the lousy parts that were not giving us thing. We've shut down some parts of the business. In Germany, we've shut down some parts of the business. And our share price today is 240. It's very difficult to summarize what every analyst is saying, but if you look at the 3 or 4 analyst reports, they're anywhere between 275 to 325. I don't know who's accurate, because my job is not to comment, but I think they're all taking into account the fact that these so-called losses are the one-time effects of the consolidation of all the 14 companies, and that's the first time we've reported this.
Post the turnaround of Mahindra CIE's financials, CIE would merge its Brazil, Mexico and China forging units into the company to strengthen its position in the forging segment and Asia. Mahindra CIE is also scouting for inorganic opportunities in Southeast Asia, as also to strengthen its presence in Japanese OEM, where it has a limited presence. Clearly, the management has set its sights higher.
My dream is that we are already a global company, all the way from Latin America to India. We need to increase our Japanese presence so that we are right across Southeast Asia and East Asia. That's number one. Then we'll truly become global. We are number 75 in the world today. Okay. 5 years' time, is being amongst the top 25 too much of a stretch? I don't know. Okay. Our criteria, our bonuses are dependent upon whether we can double our share price from today. I cannot predict anything, okay. But I think we will measure our performance not only by the geographical spread. Okay, I think that's the wrong measure. Okay. It leads to an ego, I am the king of the world. But there are 3 or 4 criteria that we follow. Okay. EBITDA 15%, EBIT 10%, okay. ROCE 20%. Okay. And the 4th criteria, the toughest, is that the free cash flow coming out of the system, okay, should be equal to at least 50% of EBITDA. If that happens, we have enough money. We are not that far away from those targets we've hit those targets in Europe, we are hitting those targets, starting to hit those targets in India if the volume picks up. We have enough money to grow. Okay. And if those kind of things happen, okay, then can the market cap double?
Clearly, Mahindra CIE Automotive is firing on all cylinders, and going by the group's track record, the best is yet to come.
Well, looks like Hemant Luthra is raring to go. Today, Mahindra CIE Automotive ranks 75th globally, but Luthra is chasing a bigger dream. He wants to be in the top 25 league. Well, all I can say is that going by the company's actions at the ground level, it's not an impossible dream. On that note, it's time to say goodbye. We'll see you again next week with another interesting story. Till then, keep watching CNBC TV 18.
Focus, ideate, innovate, enable.